Hello. All right. Hello, everybody. Uh, do you hear me, guys? Hello. Uh, hello. Just wait a second. Hello. Hello, everybody. I hope you can see my screen and can hear me properly. Those of you who are visiting the webinar, just type yes in the question section. If you can see my screen, which says the webinar live market analysis, Forex4you logo on it. And also, please, if you can hear me properly, type yes. I'm still waiting for your response, so please type, if you can see my screen which says webinar live market analysis Forex4you, and if you can see my screen, please type yes. Right, I do receive several responses, but still, guys, I need more confirmations to come. So those of you who don't know where to type, there is a question section right next to the panel, the control panel. So in there, please go ahead and type yes or plus or something like that. All right. I guess we can start now. And before we start, let me just briefly welcome you on our live market analysis webinar. My name is Yury Safronau. I'm an A2ZMarkets.com chief currency strategist and the person behind the daily free Forex signals on A2ZMarkets.com. I have a PhD degree in finance and I work as an independent equity manager. I have extensive experience in trading stocks, crypto, and Forex since 2009. First, I'd like to tell you that this webinar is sponsored by Forex4you, and let me briefly introduce you the company. eGlobal offers two main services: online trading on more than 150 instruments under the brand name of Forex4you, and copy trading investment services under the brand name Share4you. All right. On the screen below you, you see a disclaimer, and please read carefully this disclaimer. Or I'm going to be reading this disclaimer for you as well. All right. Any opinions made may be personal to the author and may not reflect the opinions of Forex4you. All expressions of opinions are subject to change without notice. This material is considered a marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation or an offer of or solicitation of any transaction in financial instruments. Forex4you makes no representation and assumes no liability as to the accuracy or completeness of the information provided, nor any loss arising from any investment based on the recommendation, forecast, or other information supplied by an employee of Forex4you, a third party, or otherwise. All right. Before we start the practical information, very detailed with the entry points and chart analysis, let me just briefly, very briefly, like 10 minutes, not more, introduce you the instruments which I do use when analyzing the market, and which you need to understand the strategy I use, and I believe it would be also beneficial for your future analysis if you do it yourself as well. So first of all, we're going to be using support and resistance zones or levels. The concept of support and resistance are undoubtedly two of the most highly discussed attributes of technical analysis. Part of analyzing chart patterns, these terms are used by traders to refer to price levels on charts that tend to act as barriers, preventing the price of an asset from getting pushed in a certain direction. Support as a price level where a downtrend can be expected to pause due to the concentration of demand. As the price of a currency pair drops, demand increases, thus forming the support line. Resistance zones arise due to sell-off when prices increase. The next slide basically shows you the resistance level. Once an area or a zone of support or resistance has been identified, it provides valuable potential trade entry and exit points. This is because as the price reaches a point of support or resistance, it will do one of two things: bounce back away from the support or resistance levels, or violate the price level and continue to its direction until it hits the next support and resistance level. Most forms of trades are based on the belief that support and resistance zones will not be broken. Whether price is halted by the support or resistance level or breaks through, traders can forecast on the direction and can quickly determine if they are correct. If price moves in wrong direction, the position can be closed at a small loss. If price moves on the right direction, however, the move may be substantial. Okay? So basically, how to find those levels? The key support and resistance levels are simply zones where the prices of the chart have found it difficult to fall below or above the zone, and often rejected any attempts to break these levels. Because of these reactions, they refer to key areas of the chart where institutional traders are likely to buy or sell their instrument, take profit, or place their stop around. So support and resistance levels can be formed in 4 different ways. The first one is psychological support resistance. The second one is the pivot. The third is price action. And the fourth one is called moving average. All right, the psychological support and resistance level are like in here, you can see the level is 120. So psychological occurs as a result of traders using price levels that end in round figures such as 00 or 1.15001. As an example, in front of you is 1.20 or 110.00. So as most inexperienced traders tend to buy or sell assets when the price is at the whole number, because they are more likely to feel that the currency pair is fairly valued at such levels. Most target prices, stop orders set by either retail investors or large investment banks, are placed at round price levels rather than at prices such as 120.15. Because so many orders are placed at the same level, these round numbers tend to act as strong price barriers. If all the clients of an investment bank put in sell orders at a suggested target of, for example, 121, it would take an extreme number of purchases to absorb these sales, and therefore a level of resistance would be created. So how to identify the psychological levels? This is very easy. The trader can look for areas where the price of an asset ends in round figures and then checks to see if the area has been respected as a support or resistance in the recent past. All right. The next one is pivot points. Pivot points is a special indicator which can be found in a MetaTrader. Basically what it does, it creates 3 levels, S1, S2, and S3, which act as the support zones. It creates the middle line and 3 resistance zones. Like in the picture in front of you, this is the middle zone. This is resistance 1, resistance 2, resistance 3, you don't see here, the support 1, and etc. And using those 3 key levels of support and resistance, basically you can take a look at how the price goes, and when it reaches support or resistance level, it tries to either break it or it goes back, retrace as a retracement. Like in here, it broke the level, went to this level, and pulled back. And then once again, it found the support here. So it's very useful to use a pivot points indicator as well as an instrument to distinguish where support and resistance zones are. The next one is called price action, support and resistance. Price action can also determine where support and resistance occur. If a particular price level has functioned as a support or resistance level in recent past, it's likely that traders will respect those levels when price approaches them, as the sentiment in the time may indicate a recent support as an oversold area or a recent resistance as an overbought area. On this slide, you can see areas that price action formed support and resistance levels. We can also see that the region that used to be the resistance area eventually became a support when it was broken. Like in here, for a substantial amount of time it was resistance, and once it was broken it became support, and you see that it was retested quite nicely on the level of almost 1300, but actually the level was 1297. All right. Then another quick way to identify support and resistance levels is to scan the charts to see areas where prices have formed recent support and resistance levels. If a bullish run terminates at the price level, it retreats before assuming another bullish run that terminates at the same price. Then this is a resistance level. As long as this level holds, it serves as a resistance, and once it's broken, it becomes a support. All right. So the next slide basically shows you how to find entries with the help of support and resistance levels. The basic trading method for using support and resistance is to buy near support in uptrends, ranges or chart patterns, and to short sell near resistance downtrends, ranges and chart patterns. It helps to isolate a longer-term trend even when trading a range or a chart pattern. The trend provides guidance on the direction to trade in. For example, if the trend is down, but then a range develops, preference should be given to short selling at range resistance instead of buying at range support. For downtrend, let us know that going short has a better probability of producing a profit than buying. If the trend is up and then triangle pattern develops, favor buying near support over triangle patterns. Buying near support or selling near resistance can pay off, but there is no assurance that the support or resistance will hold. Therefore, consider waiting some confirmation that the market is still respecting the area. Like on this slide, you basically see that there were two confirmations with the stochastic indicator when there was a retracement from the resistance level of the channel. All right. The next slide is also showing us an opportunity to buy. If buying near support, wait for the confirmation in the support area and then buy. I'm sorry. When the price breaks above the high of the small consolidation area, when the price makes a move like that, it lets you know that the price is still respecting the support area. And also that the price is starting to move higher of the support. The same concept applies to selling at resistance. Wait for a confirmation near the resistance area, then enter a short trade when the price drops below the low of the small consolidation area. When buying, your price place a stop loss several cents below support, and when shorting, basically place a stop loss several pips above resistance. If waiting for a confirmation, place a stop loss a couple of pips below the consolidation when buying. When selling, the stop loss goes a couple pips above the consolidation. When entering a trade, have a target price in mind for a profitable exit. If buying near support, consider exiting when the price reaches a strong resistance levels. If shooting at resistance, exit just before the price reaches strong support. You can also exit at minor support and resistance levels. For example, if buying at support in a rising trend channel, consider selling at the top of the channel. In some cases, you may be able to extract more profit if you just let the breakout to occur. Instead of selling at a minor support or resistance, for example, if buying near triangle support within a larger uptrend, you may wish to hold the trade until it breaks through triangle resistance and continues with an uptrend. All right. There is another approach as well. Some traders prefer to buy when price comes close to support level, either directly on the level or close to it. They use very tight stop loss, several cents below the support. You basically can see there the support level and the very tight stop loss. In this case, even if your position is closed by stop loss, you don't lose a lot. But in case of a retracement, you can catch the movement from the beginning. All right. There's also a concept that old support can become new resistance or vice versa. This isn't always the case, but does tend to work very well in specific conditions. The next instrument which I use for live market analysis is called moving averages. Most technical traders incorporate the power and various technical indicators such as moving averages to aid in predicting future short-term momentum, but these traders never fully realize the ability that those tools have to for identifying levels of support and resistance. As you can see from the chart below, a moving average is a constantly changing line that smooths out past price data while also allowing the traders to identify support and resistance. Notice how the price of an asset finds support at the moving average when the trend is up. Traders can use moving averages in a variety of ways, such as to anticipate moves to the upside when price lines cross above a key moving average, or to exit trades when price drops below a moving average. Regardless of how the moving average is used, they very often create automatic support and resistance levels. Most traders will experiment with different time periods in their moving averages so that they can find the one that works best for the specific task. All right. So how do we use moving averages? The moving averages lag current price action because they are based on past prices. The longer the time period of moving averages, the greater the lag is. Those 200 moving averages will have a much greater degree of lag than 50-day moving average because it contains prices of the past 200 days. The length of the moving average to use depends on the trading objectives, with shorter moving averages used for short-term trading and long-term moving averages more suited for long-term investors. The 50-day and 200-day moving averages are widely followed by investors and traders, which breaks above and below these moving averages considered to be important trading signals. So moving averages also important trading signals on their own. And when two moving averages cross over, this is a signal as well. A rising moving average indicates that the security is in uptrend, while a declining moving average indicates a downtrend. So determining trends with moving average is really easy and visually comfortable. Similarly, upward momentum is confirmed with a bullish crossover, while occurs when a short-term moving averages cross above a longer-term moving average. Downward momentum is confirmed with a bearish crossover, which occurs when a short-term moving averages crosses below a longer-term moving average. So basically, really quickly, I'm going to show you a couple of slides and describe how can you determine a trend with a moving average. It's like, for example, on this slide you can see a bullish trend. The 200 blue moving average goes below the red line, which is 50-day 50, basically I believe it's daily, no, it's 1 hour time frame. So it's the 200 hourly moving average is below the 50 hourly moving average, which is red, and below the price. This is a clear indication of the bullish trend. On the opposite, the bearish trend is when the 200 moving average is above the 50 moving average and above the price, and the price is below those two moving averages. This is a clear indication of bearish trend. When there is no trend, basically the moving averages intercept between each other and the price. So that's a clear slide where there is no trend. Then what else? You can basically determine not only trend with the help of moving averages, but also moving averages as themselves. They are giving you signals. Like, for example, on this slide, you see a lines interception. And when lines intercept, that's a clear indication that the trend is changing. Basically, what we saw here is that the lines were acting in a bullish way, so there was bullish trend until lines intercept. When lines intercept, you see that the trend became kind of bearish. And what's funny on this slide is that you can see that those two moving averages, they act really nicely as support and resistance levels. Like in here, the 50-day moving average, 50-hourly, I'm sorry, moving average was acting as a resistance as a support in here, right? Then it broke this moving averages and it became a resistance for some time. Then it broke it again and it became a support. After it was broken, the next support is 200 moving average, right? When it broke the 200 moving average, those 200 moving average became resistance, right? So it was a support and then became resistance. So moving averages are acting very nicely as a dynamic support and resistance zones. They also show you the trend, right? And they also intercept with each other so that you can basically see when the trend is changing. All right? Okay. Right now we're going to be jumping on the chart. Let me close this window for you and to make slide larger. All right. We're going to be analyzing major currency pairs, which I have right here. And also, if you're interested in any specific currency pair and you want me to analyze the specific currency pair which I didn't do analysis on, just go ahead and ask it, but by the end of the webinar. Now let's start with the British pound dollar. All right. Oh, actually, before we start, I'd like to tell you that I'm really technical trader, right? I've said it multiple times, but even the technical traders, they have to look at the news, right? Because due to some important political releases or economic releases, you have to be aware that something is going on, and that is why you have to pay attention to some fundamentals as well. Though trading with fundamentals, this is basically up to you. So what we're going to be doing now is we're going to be going to the Forex4you website, Forex4you. All right. In here, we're going to go to the analytics section, and then we're going to choose economic calendar. All right. So basically what the calendar shows us is the number of economic and political as well releases that's going to be going this week. As I've already told you, I'm not a really fundamental trader, but I do pay attention on those important events. So basically for myself, I do use only the events, and I pay attention only the events with the highest probability, highest volatility effects. So in this Forex4you economic calendar, you basically can click on the settings button, extended filters. You can go back and you can choose the highest volatility subjects. Then you can click filters, and basically it would show you all the events which gonna happen this week and which have the highest volatility effects. So as of today, we don't have any events. Tomorrow it's going to be a Reserve Bank of Australia minutes released. Also, it's going to be Zoo economic sentiment from Germany. All right, the Bank of Japan monetary policy meeting, FOMC, which is a very important event for all Forex traders because most of the traders, they trade USD related pairs. And if you're trading with NFD, this USD related pair, you should pay attention on FOMs for sure. All right, and watch for it very carefully. It basically shows me my local time, but you can adjust in the settings the time for yourself. On Thursday, we have SNB meeting and Bank of England meeting, which would affect Swiss franc and British pound as well. And on Friday, basically, there are some economic releases, the PMIs for the European, from Germany and overall the Eurozone, and Canadian retail sales, as well as the price index. So basically, when trading currency pair, let's say you're trading the Japanese yen, and you should basically pay attention on Wednesday that it's going to be a Bank of Japan monetary policy meeting, and you either don't trade this currency pair or watch very carefully what head of Bank of Japan says during the press conferences, or read the minutes right after the release and take action according to your expectations. The same goes for FOMC and Reserve Bank of England and S&P as well. All right. Okay. It's also not displayed, but on Thursday as well, it's going to be a Euros summit of Eurozone leaders, and they're going to be discussing the Brexit and how it's going to affect whether they're going to be given a delay for the Brexit for United Kingdom or not. It would affect British pound as well very, very much. So watch for it. And now we can go to the MetaTrader to basically analyze the currency pairs, and we're going to be starting from the British pound, right? So on the daily chart in here, you can see that before this interception, the trend was basically bearish. The pound was dropping on expectations of hard Brexit and so on. But as of now, we know for sure that it's not going to be hard Brexit, and hard Brexit is not going to be affecting the British pound very, very much. Though there is a certain uncertainty over how the Brexit would go, whether the British Parliament would adopt the deal which they have at the moment, or they're going to be rejected, and how the European leaders would approve Brexit, or they won't approve it. That's also a question, and this question would be figured out partially on Thursday. So basically, the pair is very dependent on the political events and fundamental factors. And in here, you can see how the pair reacted last week, right? On Monday, we saw a very, very nice bullish candle, which kind of suggests that, oh, it's going to be a bullish trend. The next candle is bearish. The next candle is bullish. The next candle is bearish. The next candle is bullish. And it shows you that basically the situation is uncertain, and it's very hard to trade profitably when there is such an uncertain situation over some political event. But anyways, guys, we're going to be trying to do that. All right. And I'm going to be jumping to 4-hour slide to show you my channels. On 4-hour chart, you can clearly see that the currency was moving in channels, like in here, then in here. When it breaks the channel, it forms another channel. When it breaks this channel, it forms another channel. The latest one, which was formed during last week, it's not like a channel, it's more like a wedge in here. And this wedge is basically broken. Let's jump to 1-hour slide to make a clear view, right? The wedge was broken today, like a couple of hours ago. Then the currency is basically facing support in the form of 50-day moving average. I can click and show you. We actually need to add more indicators. What I do use is MACD, all right, and stochastic. All right, the MACD and stochastic. All right, now that's the full picture which I have right now. And what I'm going to be suggesting to you is basically it's good time to sell the currency even from this level. But from this level, it's a little bit dangerous. I would prefer to wait until it retests this channel level. Let's say in here, or at least, or at least I would expect the currency to move to the 50-day moving average, 50-hour, in here, and sell it from here. All right, that's my view. Let me just show you an arrow down. So you either sell from the moving average okay? Or you can as well sell from somewhere here, like from this high, not higher than the previous high, but you can see that it's kind of a resistance area in here. So this is another sell opportunity for you. All right. What I'm going to be doing is I'm going to be placing my stop loss above this local high and my take profit minimum on this moving average, on the 200 moving average. So you either sell from 132.62 from the 50-day moving average, or from 132.96 with a stop loss of 133.38 and a take profit of 131.63, somewhere here. But this stop loss is not fixed. You need to move it according to the moving average. So probably when the moving you see that the moving average is slightly rising, so your take profit would be a bit above the moving average, maybe 31.65 or 31.70. So in the case, if we open a transaction in here, we have almost 100 pips take profit and 70, like 80 pips stop loss, which is more or less okay, but not ideal. Like having a 75 pips stop loss and 100 pips stop loss is okay, but in this correlation, it's not really nice. But if we remove this level and I'm sorry, and leave only, let's say, this transaction, okay, in here. So if we put a sell limit order on the level of 132.96 and a take profit in here, so we have basically a 40-45 pips stop loss and a very nice 120-130 pips take profit. That's what I'm going to be doing. All right. Actually, we have a disappeared level. And the properties, I use it dark blue. Okay, this is basically where I would put my entry. So the first option is to put it here. The second option is to put it here. Also, you can basically put the first order here, and then if it jumps to the channel bottom, you can basically add to your position or open the second position and to go down. I don't see any bullish entries from here as of now. Just to, if it goes back to the channel, right, it's probably that it's gonna be more like a bullish action, but as of now, the wedge was broken, and I do expect a bearish price development. All right. Okay. Also, guys, if we had an analysis like on, let's say, Wednesday, I would tell you that there is a divergence in here. You see this peak, this is a higher high, and on MACD, basically, you can spot, let me just go for a red one, and also remove array. Okay, so basically in here, you see a higher high on the price movements in here. And the MACD divergence, it's like a lower high. You see that this peak is lower than the previous one. This situation is basically called a divergence, when the price demonstrates a higher high and the indicator demonstrates a lower high. It suggests that the currency should reverse really soon. This is a usual divergence. Sometimes a triple divergence happens. As well, you can basically see divergence on the stochastic indicator as well. So as a confirmation, so this level was a really nice level to start selling, and you see that it basically worked out. All right. The next currency pair is Euro USD. This is basically a daily chart. Please don't pay attention on those levels. We would need those levels when we analyze an hourly chart. But right now, let me show you what market developments are going on the daily time frame. Basically, the currency is in clear bearish trend. The 200 moving average is on the top. The 50 moving average is basically below the 200 moving average, and the price is in the bottom. So basically, what we see is a clear indication of bearish trend. As well, there is a channel in here on the daily time frame, which works really amazing, like pips to pips. It goes up and down in the channel. And right now, I can clearly see that we are near the upper bottom of the channel, and a very support of 200 moving average was basically faced by the currency today. The high of the currency today was 58 according to us, and the value of the moving average is 60. Let me show 62. So basically 4 pips difference between the price and the moving average. I would expect the currency to drop. Even I would suggest you to sell right now. All right. Actually, what I'm going to be doing is I'm going to be selling there myself. 0.5 lot. I'm going to be selling it right now. With, let's say, because where is my logic, right? So my logic is that we're in the bearish channel in here. Okay. We are facing a very nice resistance in here in the form of the moving average. All right. And it's very nice to sell. The best case scenario would be to sell it from the moving average in here directly from the level of 113.62, or even better to sell it from this level of 113.83. That would be amazing. But as of now, I feel really comfortable to sell it even from the level I see there right now. All right. In this case scenario, where would be my targets? Where would be my targets? All right. So my targets would be, I would put my stop loss above the channel line. So basically somewhere here. Okay. I'm thinking that would be okay. The level of 13.95, yes, more or less okay, which is 50 pips stop loss. As you can see, I sold it from here. And my take profit would lie minimum in here. So on the lowest low of this candle, I would put my take profit, that's the level of 11.80. So as of now, we have 45 pips stop loss and the potential of 170, 165 pips take profit. Let me just put my order. So I'm going to be putting a take profit of 11.80 and my stop loss on 95. It is better to even go for 16.05 just in case, you know, the 14.00 is around level. So basically I would suggest to put stop loss a little bit above it just in case, okay, and put it like here. So guys, what do we have in here is we have a potential of 165 pips take profit, and we have how much? Around 65 pips stop loss, which is a really nice correlation. And as you could see, I sold it from there. I have sold it of 113.45 right now because this moving average is a very, very nice resistance level, and we are in clear bearish trend. All right. Okay. Also, what you can do is you can put, if you are not comfortable to sell it right now, you can put a limit order of 101.1362 on the moving average directly, or a little bit above it on the upper bottom of the channel, somewhere of 113.83. In this case scenario, you would have only 20 pips stop loss and a very nice take profit, but who knows if it's gonna go more higher. I mean, all right. Then we can jump on the hourly time frame. On the hourly time frame, you see that we are in the upper channel. The upper channel is still holds in here, but I do expect it to be broken soon. So the major resistance zones we have in here is like 113.20 and then 112.83. So basically, those can face a resistance. Oh, as well, if you take a look on the chart itself and on the indicators, basically there was a divergence in here. You see that the chart was basically there was a higher high in here and there was a lower high, so which is an indication of a potential reversal of the just let me to draw it for you. Okay, you see a higher high in here but a lower high on the indicator as well. In here on the RSI you could see it as well. So basically this is an indication that the potential reversal is really close and we are facing the upper bottom of the channel in this zone. So what I would advise you is to sell. I've sold it myself, as you can see, and for me it's working okay for now. All right, then we jump to another currency pair, which is USD Japanese yen. Let me just open my template. USD Japanese yen. Okay, we jump on a daily time frame, and on the daily time frame we can clearly see that the currency is more bullish than bearish. It stays in the bullish channel and the channel is still holds, but the currency retests this channel in here. So basically it faces at some point a resistance as a moving average. It broke the resistance, went back, faced the this resistance once again. Now it broke it, but at the same time it stays in here. So the situation is basically hard to tell where the price would go. That is why I would prefer to go on the smaller time frames. And always smaller time frame, on the 1 hour time frame, we can see that the currency stays in the channel for now. But in the case the channel is broken, I would suggest you to put basically a sell stop order somewhere here below the lowest candle, the local low. I would suggest to put this candle in here. All right, even probably a bit below this consolidation area. Yes, somewhere in here. Okay, below this consolidation area, a couple of pips below it. And then the stop we would sell. So let me put the arrow down in here. Also the stop loss I would put above the local highs, right? So somewhere here. Okay. And the take profit, the minimum take profit would be the local low of here. Okay, like that. That's the first take profit which I would get. In this case, we have 58, maybe 60 pips stop loss and 90 pips take profit, which is okay. It's the correlation of 1.5. We can use that entry. All right. So basically, What else? The price can also be returning to the channel, all right? And in the case that the price returns in the channel, you can open a buy position. All right, I'm going to be removing this one. The buy position can be opened from the bottom of the channel in here with the very tight stop loss below the local lows, like in here. Okay, and the take profit would be on the upper bottom of the channel somewhere here. Okay, I'm sorry, let me just put an arrow up like in here. So if you buy it in here, even on the current trade, like 11.50, you buy it, you put a very tight stop loss of 20 pips, okay, 20 pips in here, and the take profit, it goes all the way up to here. So the potential move for 200 pips, which is also very, very nice. All right. Okay, let me delete it for you. So that's two entries which I would advise you to go. So the first one is the sell opportunity if it breaks the channel down. The second is the bullish opportunity when it retraces from the bottom of the channel. The next currency is Australian dollar and USD. All right. Basically, what we see here, only daily time frame, that the currency is more like in the bearish trend. You see that it was for a substantial amount of time, it was in the bearish channel, it broke the bearish channel, then it faced a resistance in 200 moving average, tried to went back to the channel, didn't work out, and right now it faced a resistance on 200 moving average as well. Then it basically jumped back and formed a wedge, another wedge, which we see right now. The currency is pretty much in the bearish move. That's why we're going to sell. And the best trading opportunity from my point, it would be to put a pending sell limit order on the level of 0.7125, like it's the upper bottom of the channel. All right, and it's kind of a local consolidation area. You see that it worked as a resistance in here and as a support zone in here. So that would be my sell opportunity for you, basically in here. And the stop loss would be put above the local consolidation area of here, like a little bit above it. All right, which gives us how much? More like 40 pips stop loss. And the take profit I would put on the local low of that local minimum. So in this case, the take profit would be 115 pips. So that would be my suggestion for the Australian dollar USD. Then we go back to the let's analyze gold. We have gold to analyze. I would basically go for open my template for gold. All right. So what we see there on the daily time frame is that gold was, for a substantial amount of time, it was on a bullish trend. It broke the channel up, then formed a wedge in here, faced a major resistance, and then went back inside the channel. So right now, the gold basically stays in the bearish channel, like the red one you see here. And but at the same time, it's trying to break the channel up as well, paying attention that there is a moving average as acting as a resistance, and there is upper bottom of the channel acting as a resistance. Let's go back on the 1 hour chart, and you see that basically there is a possibility for the bullish developments as well. So my advice would be to trade up if it breaks the channel up. So basically the first option is simply to put a pending buy stop order above the previous high, and you see that the previous high was in here. Okay, so we put a pending buy order on the level of 113.12. Let's make it 12. It's above the previous high. The stop loss would be below the bottom of the channel. This is an upper bottom of the channel, but I would advise you to pay attention that sometimes the currency retests the previous resistance zones, which would act as a support. And I would advise you to put your stop loss below this level. Actually, there is a round level of 13.00, so we can put it a little bit below it. All right, and the take profit I would put on the previous consolidation area, the local high. You see it was confirmed here and here. So which in the good case scenario would give us around $15, and the stop loss is like $12, which is maybe not the best correlation, but the entry is, I would say, reliable. So I would use this trading opportunity. Let me put an arrow up from this level, a pending buy stop order from here with these parameters. Also, we should pay attention that there is a possibility of further bearish developments, and in case the currency pair breaks this wedge, which we have on the hourly time frame in here down, and it breaks this resistance support, zone in the form of the wedge and combined with the 200 moving average, we can easily sell. The sell opportunity would arise from the level of, I think, 1289, right? With a tight stop loss above the previous support level of our wedge, and also the previous the moving average. So I would put it somewhere here, and the take profit in this case scenario would be minimum low, previous lowest low. So this opportunity would give us $75 stop loss and like 90 something dollars take profit. All right, that's another opportunity. So basically my idea is to wait until the currency either breaks below this kind of wedge above or below, and then take action, because in between those two support and resistance zones there would be fluctuations up and down until price decides where it should go. All right, the next currency pair is called USDCHF, Swiss franc, United States dollar, Swiss franc. Let me open my template in here. All right. Basically, on the daily time frame, you can see that the currency pair is in a bullish trend. All right, it's more like a bullish trend, but the recent market developments suggest that there is a very high probability of a reversal, because you see this upper line of the wedge, it kind of, it's not even a wedge, it's more like an ascending triangle. So you see that it's almost the line is really straight, and this line is more like rising, so it's more like an ascending triangle. So basically what I would suggest you to do is to wait until these lines are broken, either up or down, and as well we can sell it from the upper bottom. So if we scroll back to the hourly time frame, we see that this line of the ascending triangle was faced and acted as a resistance. In here, the price retraced from this level and went back. So right now it's more like staying in the, let me just adjust it a little bit. Okay. It stays in the channel, in the bearish channel. So what are we going to do is we're going to wait until it jumps to the bottom of the channel and then sell. So we sell it from here with a very tight stop loss above the moving average and the take profit on the upper side of the channel. In this case scenario, we have like 15, maybe 20 pips stop loss, and in this case, like 50 pips take profit. All right, that's one opportunity to sell it from here. Let me put an arrow down. Okay. Another opportunity is to wait until price faces a resistance in this channel and to sell it from here. Or if prices breaks above this higher high, local high, it can go all the way up. But it's a long way to go for now. It's 120 pips, not so long. So probably that's an also opportunity what you should find if you scroll back to the daily chart. You basically can see that it's a possibility for it to break this level and to go forward up. Or on an hourly time frame, we can see that the trend is more like bearish, and we can sell it from here. All right, the next currency pair would be, I do remember we have a barrel. We analyze oil, so let me find it. Okay. This is strange, but I don't see. For some reason, I don't see. Let me just change my account a little bit. View terminal. Ah. All right, then I just show all. All right, there it is. Let me open a chart window, use my template. And there we go. So on the daily time frame, the barrel is in bullish trend, more like a bullish. Now it stays in between the moving averages, but for a substantial amount of time, it's in the bullish channel, right? Also, a wedge is forming. You can basically see this wedge in here. And the possibility, the currency is really in like slow volatility mode. So basically what we can do is we can trade from the bottoms of this wedge or as well use the lines of the channel. You can see that the channel, this is an upper line of the channel, this is the lower line of the channel, this is a middle line of the channel, kind of a middle line. It's not actually the middle line, but I simply use this line to see the major resistances of the local chart, and you see that it works. So probably my advice would be to sell it from the bottom of the wedge. So put a pending sell limit order in here. Let me put an arrow in there, arrow down. So also let me put a stop loss. The stop loss would be above the higher line of the channel, like in here. All right, it was 68.10, and in here 69.10. So $1 stop loss, and the take profit would be minimum on the lower bottom of the wedge, which is yellow here, right? So which would give you like $2.50 take profit. Or as well, if the currency drops, all right, let me delete it for you. So if the currency drops to this level, I would advise you to buy the arrow up with the very tight stop loss below the local lows, like in here. Okay, so it would be actually the entry should be a little bit lower, like in here. So which would give you $1.20 stop loss, and the take profit would be somewhere here, and the take profit would be $2.50 as well. So try to stay in the range of these wedge yellow ones, which is showing you with the yellow lines, because the currency is not really volatile right now, and selling from the bottom of the wedge and I'm sorry, selling at the top of the wedge and buying at the bottom of the wedge can be a good strategy in this case scenario. All right. Okay. Then basically what I'm going to be doing is I'm going to be analyzing another currency pair. Let me just this is British pound, Japanese yen chart window. So basically, on this daily time frame, we can see that the currency is for sure on bullish price developments momentum. Then we can see in here that there was a triangle formed, right? In here with the blue lines, this one. We can make it a little bit bigger for you to see, and this one. So this line was broken, and there is a very high possibility of the future bearish developments of the currency. The potential take profit would be the amount of the triangle foundation. So after the triangle is being broken, all right, you can expect it to go at least to this level. But I would say that it's not a typical triangle, because usually the triangles are being broken in the first 75% of it. So if it breaks before going to the end of the triangle, so if it was broken in here or in here, it would be a valuable triangle. But if it went to the even the side of it, it kind of says that triangle is not really worked out. So you should not expect it to go all the way down. But as of now, when it broke the moving average, I believe it can find the next support minimum on this channel level, right? This blue line, or it can go down to this line. So my personal attitude is to put a pending sell limit order in here, right? On the level of a little bit below 148, so like 147.95. All right, a pending sell limit order to put a relatively tight stop loss above the local highs somewhere here, right? Like 50, 55 pips stop loss. And the take profit I would put on the next moving average, like probably 146.80, like in here. So in this case scenario, it would give us like 50, 55 pips stop loss and 120 pips take profit. All right. Okay. The next currency pair which is going to be analyzed today is Euro British Pound. Let me just check it. All right. That's a daily time frame. We can see that the pair is in clearly bearish move, and that is why I would advise you to basically look for sell opportunities. As well, you see that the wedge is forming in this currency pair as well. The currency is jumping from the top of the wedge to the bottom of the wedge, from the top of the wedge to the bottom of the wedge, and etc. So acting, the possible action would be to put a pending sell limit order from here, right, arrow down, with a relatively tight stop loss above the local high, and the take profit on the previous lows somewhere here, right? So you have 40 pips stop loss and 160 pips take profit. As well, there is a possibility for you to buy the pair from the bottom of the wedge. All right. So basically, that would result in buying from somewhere here. There's a very tight stop loss. Let me even put it like that. Below the bottom, the lower bottom of the wedge, and the take profit on the opposite side of the wedge, which would also give you a very nice perspective from risk management point of view. So it would give you like 25, 30 maybe pips stop loss and like 150 pips take profit opportunity. All right. The next pair is a United States dollars, Canadian dollar. All right, CD. Let's take a look at the daily time frame. On the daily time frame, basically you can see that the pair is for sure on bearish move, and this on bullish move. I'm sorry. And there are two channels formed. The first one is in here in blue. Let me just make it like that for you to clear view the two different channels. So the price started to move in this channel, but then it kind of formed another channel. The price is for sure is in bearish trend, so we're going to be looking for bullish opportunities. And in here, it's like a descending triangle in here. The descending triangle was broken. And what you can expect from the currency pair is you can expect, the wrong one. Okay. You can expect the currency pair to move at least to this level. So that's the minimum for the currency pair to move right now. So what you can do, you can go ahead and buy it from even right now from the level of we have 133.32. You can buy it right now. The stop loss which I would advise you to put would be below the local minimums, below the local lows, and below the bottom of the descending triangle which you see. So it would be the level of 32. Let's make it 75 just in case. So even if you buy it right now, you have 55 pips stop loss and like 105 pips buy opportunity. If you don't want to buy it right now, you can wait until it tests this channel level. You see it tested it. This channel is kind of sustainable one, and you see that the price is going to went to test it several times. So basically you can expect it to test it once again, and there is an opportunity for you to wait until that moment and probably buy it not from the current trade but from the level of 33.15, which would save you 15 or 20 pips, something like that. But for sure I would look for bullish opportunities only in this case, and I would advise you to buy it even. It is, let's say, it is quite possible to buy it right now because it's a good buy opportunity. So basically that was my view on the major currency pairs. We've analyzed like 10 currency pairs right now. And if you have any questions regarding those currency pairs, regarding the theoretical part I gave you, the educational one, or about any other currency pairs, I'm here for you, and I'm here to help you, so that you're more than welcome to ask questions. All right. Feel free to ask any questions you want. I like your analysis. When the next webinar is going to be. So the next webinar is going to be next Monday, the very same time. You are more than welcome to join. If you like that webinar, feel free to sign up for the new webinar. We have like 3 webinars of the live analysis to come. Each Monday, same time, we analyze the live market, and as well there is educational webinars. 2 webinars have already posted. There was a basics of Forex trading and MetaTrader 4. Those webinars have posted. This Thursday, same time, we have an educational webinar on candlestick patterns and candlestick analysis as a whole, and you are more than welcome to join. You see that I use the candlesticks, and that this is a very helpful instrument to analyze a Forex market, and not only Forex, but any securities or commodities you trade. So you are more than welcome to join this educational webinar as well this Thursday, same time. All right. Any other questions? It appears that there are no questions for now. So I would like to tell you thank you for visiting this webinar. It was really nice meeting you here, and I was here to assist you. So if you like the webinar, please feel free to sign up for a new webinar next Monday, same time, and the educational webinar on candlestick patterns this Thursday. And thank you very much for visiting, and I wish you a very happy and profitable trading week ahead. Thank you very much. Bye bye.